The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome all to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Once more, into the breach do we go, dear friends. As we start the show, we're off 4 points in the S&P cash. We're down, 20 some odd points, down to 21.15 on the S&P cash. So we're 20 points up off the low of the day. What do we have? Had some decent volume, ran some people out. The volume that's come in off that low has not been very good. And, you know, a lot of people want to buy these lows. The big difference is that people just aren't shorting this market. So there's just not that much grist for the mill to run people higher. But, you know, we had Weird Wally Wednesday. Maybe this is kind of the end of that, going into expiration a week from tomorrow. But we'll keep an eye on it. As always, we like to come to you at this time.
The following takes place between 2 p.m. and 3 p.m.
Volume comes in today at 2.14 billion shares as we start today's show. So we'll continue to keep an eye on that. And I don't know if there's a whole lot more to say about that. But, you know, in bear markets, which I think that there's a good chance, and I thought that any close below 2140 on the S&P cash was confirmation of that, and probably a significant close above 2140 would be confirmation of a false breakdown. But I continue to see extremely light volumes, as we saw yesterday. And then we hit the air pockets. There just aren't enough shorts on the downside to keep the market from going lower. We have intraday people pulling into the market and buying, but it's not with any kind of gusto. I always love that word, gusto. You only heard it on the, Slits beer commercials were the only one. You had to have gusto back then. But anyway, just not a lot happening. So we will, at least so far today. If I would have seen a lot of volume come in here, maybe I would have thought maybe there's a little bit more. When I look at some of the weaker stocks, though, they're still down significantly on the day. You would think that the market was off 15, 20 points on the S&P cash. If you looked at most of the stuff I'm looking at. Now, are these things way off lows today? The answer is yes. But my guess is that we will at least have a retest of today's low before expiration next week. So a lot of sitting on your hands out here. The question is just how slow will they let the air come out of the balloon? And, of course, my favorite indicator is the TLT. It got its first real bounce, I suspect, today. Still under 4 million shares on that. We'll see how that closes. In the meantime, it's time to get this party started.
That it's all just a little bit of history repeating.
What do we have going on today? In 1989, it's Friday the 13th. And Wall Street takes an unlucky pounding. The proposed leverage buyout of the United States hits a snag when banks refuse to lend, and the Dow Industrial Average plummets 154 points in an hour. It's the end of an era. The junk bond binge of the 1980s dies a sudden and permanent death today in 1989. The Dow closed down 190 points on that day, or almost 7% at 2569. And then a record 108 million shares traded hands in the last hour of trading. That's about what we trade every half hour now. So it is interesting. Anyway, you know, we are lower without significant buying. The question is, how many people are going to want to hold on into a Friday or a weekend if this market can't get some legs and some energy underneath it? I will continue thinking that we hit 2090 before a week from tomorrow on expiration. Now, could we get a bounce out of that? That's significant. I think so. But at the moment, I don't see anything that is legitimately changed. I don't see a lot of people shorting. In fact, yesterday had a lot of people stand way away from the short side of the market. And a lot of times why you have these kind of little hiccups as we had in the open in the early part of the day. People buying it back, but there is no real juice so far. As I said, 2.16 million shares. That's about it. Not a lot going on out there other than a lot of junk in the news cycle. And so I don't know if there's anything to really talk about. We've got some stocks that are moving. But other than horrible statistics in a election that if you go to like Rasmussen, who is the only pollster to actually get both sides of the aisle correct during the primaries, it is a election that has not been resolved yet, no matter what everybody tries to tell you. It is a dead heat going in at least to yesterday night when they concluded the last polls. And I think a lot of people wanted to say one thing's happening or another. I can't say that. I can say a couple of things, though, and that is around the world where the press was 100% committed to one side of an outcome, from Brexit to the Colombian adoption of the rapist and killers and the horrible people of Colombia, the FARC. Everybody just said, you don't even need to go to those polls. Don't worry about it. Don't go to the polls. It doesn't matter. There's a lot of people saying one thing to the pollsters and saying another thing when they get into that voting booth and are able to vote anonymously. But we'll think about that. But again, look up the Wilder effect if you want to think that polls today are a lock for either one of the candidates for the presidential cycle, or a lot of states too. A lot of people just not telling the people that take the polls the truth anymore. And what do we have? A 5-point swing or 6-point swing on the British exit vote that no one ever thought of? I thought it was close. I couldn't know. I think it ended up being, 52-48? Of course, they said it was going to be 57-43. And, that's I always wonder if these people should just poll a football game. Then we don't have to watch it. We just take the poll. That's going to tell us exactly who's going to win, isn't it? It isn't. It's just annoying to see a poll that's this close. But liars and charlatans telling us what is going to happen. It is not over till the fat lady sings. We will be back after the short time out.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And the big winner out here, I've got to get that winning song or sound effect. I just haven't got it yet. I wanted to play Van Halen's Higher and Higher, but there's got to be a better one out there. The winning horn, I've tried to find from The Price is Right, and it's always got 15 people talking over it or something else. It's not a clean, wonderful, bouncing higher thing. Maybe we'll just give it a hefty. Earnings were hefty in Ultra, ULTA, the Ultra Salon Cosmetics Fragrance store. And this one kills me because I drove by it about 4 times. It was right next to a Best Buy that I used to go by. And I was seeing people just pile in and out. And I want to kick myself for not going, what is this company? Is it public? Whatever thing. This is like 2 or 3 years ago where this thing takes off. It's got to be one of the hotter stocks out here. So this thing has been on a tear. In fact, if we go back several years, this thing just has been in an uptrend for forever. And apparently it's doing very well. It's got some specialized brands that no one else has. Earnings is still kind of good out here. The volume caught a lot of people short. This particular one, thinking it was coming over. Again, when you get into one of these, if you were thinking about shorting this, probably give it 3 days, but you want it to come back under a 3x3 or a 9-day moving average. But we'll have to see. I don't know. This thing's got a nice little gap out here that it bounced off of on September 15th. I suspect that if it did fail back up at 278.63 again, that you really are going to come back here, or at least if I was going to buy this thing, it would at least have to come back to $220. But one of the better stocks out here today, what do we have out here? On the downside, Marriott Vacations, VAC. Take a quick look at it. This, of course, will get the the loser horn, if I can find. Oh, here it is. Wow. Nothing says bad like that, doesn't it? When the Price is Right. Lots of volume from Marriott Vacations Worldwide. I want to go through the earnings on this one just to see what these folks have to say, what's going on in Marriott Vacations. But that might be something to look at for, what is it, CCL, Carnival? See if there's any byproducts out here. And this is already in a downtrend, almost in an ABC down, actually. Not a lot of volume today, though, in Carnival. I'm much more ready to probably short Carnival come March of next year. And kind of anytime people are taking winter vacations, this stock tends to have a fairly decent run on it. What else do we have out here? Myrid Genetics, I think it was much lower earlier in the day. MYGN, isn't it? It is. Off about 2.5% now, but this thing is still under this high volume gap down from, what is that, the 10th of August. And I don't know if you can say anything other than that. You would want, a close back above. Volume's not all that big of a day. But again, you get a big drumming like you got on the 10th of August on 19 million shares on this thing. And it's going to take a while to come back out. If we look at it longer term, this did underneath the December 30th, 2013 low and did so on volume. And let's go back a little farther. Have to even go back farther than that. We're underneath it. You got underneath that December 30th low on volume. Maybe you get a bounce back up here. If I was going to short this thing or thought that there was a possible short in this, I'd have to see something else before I would even think about going long. But if you were going to go short, again, this is one of these stocks that's got the double gap in it that's pointing to about $27. If you got up there and the volume was ultra light, that may be something you would want to look at. But I don't know. It's kind of hard for me to think that, if you weren't shorting this thing above 42, 43, 44 bucks, I'm not a big fan of coming down here and waiting for this thing to have itself and then short it down at these levels. But you might have, especially if you're going for intraday trades or looking at this for an example on the IBB, you might want to take a look at that $27 level. And when it gets there, look at the IBB again and see whether or not in a bounce you might have something. Ocular Therapeutics, what else do we have? Contra Pharmaceuticals, and just a lot of stuff. Let's look at some other stocks of interest. Let's go look at the FANG stocks to begin with and see how they're operating today. Get on a little closer. We've been talking about this for a little while and why I thought the market was headed lower. And a lot of it had to do with the fact that some of the biggest stocks, and I meant big by expensive and market cap, were getting shorted over the last, 10 days. Not a lot of the smaller stocks, but certainly the Googles and the Amazons started to see significant interest in shorting. And don't know. I got a sample winning. Well, I guess I could get Charlie Sheen. I'll have to look and see if Charlie Sheen doesn't have any great winning. Anyway, this would be very interesting. Overlays. This is broken underneath the 3x3, and until it would close back above this trend line for the 3x3 displaced moving average, I suspect lower prices. I'm not expecting the wheels to fall off of Amazon anytime soon, but if you're probably not a retail trader if you're shorting Amazon up at these levels. And I think that's a pretty good sign that the street is looking for lower levels. And we'll have to see how today kind of comes out. But hard to say. Oh, anyway, so we got Amazon, and then we want to go to Facebook, who has its earnings coming up fairly soon. We did get a break below it 3x3 today, and a significant gap to lower. You know, the end of the world, the answer is no. I thought we were pretty close to a high of peak social media, and this thing's just kind of been going sideways for a while. Really, the problem is, what are the numbers going to say at the next earnings, especially when they changed the whole thing about the way they count videos, and two, whether or not they get sued by Google, since a lot of those videos that they count as ad revenue are actually just total rip-off posters over on Google. That thing's going to eventually be an issue. I just don't know when. Look up freebooting on YouTube if you want to get the details on what Facebook is doing and how many people are just snatching videos off of it.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we had a few people stepping back into the TLT. Someone wanted me to take another look at that today, and whether or not I still suspect that we're in an ABC down. As I said, yeah, I don't see any real change. What we do have is a lot of support at this area. It's going to take a while for the TLT to chew through this 120 or 132, 133 area. So a little bounce out here this thing goes sideways. It may take, 3 days, but my guess is that we do open up one day, gap through this 133, 132 area, and find our way back down to the 128 area. But I can't say it's Monday or Tuesday or even that it's not tomorrow. I just suspect that it will do that before next Friday, and that's just from the general weakness in the markets. Anyway, we're off 4 points in the S&P cash. Very interesting afternoon change in volumes these days, and that is, we're getting it to about this time, which is about 2:30 in the afternoon Eastern time, and we see the volume just die. I mean, it really just cratered yesterday, but again, we shall see. But the same thing, it looks like it's all but stopped yet again. So we've got these extremely light markets in these late afternoons before we get to the close. Anyway, so far, again, the TLT doesn't have a lot of juice. Just 5.1 million shares yesterday compared to upwards of 9 million shares before. What do we have? 7.5, 7.6 yesterday, 8.3 the day before, 6 points. And what we had 9 million. We had 10 million shares on the 7th. So we're kind of back up into that candle of the 7th with half the volume so far. So I don't see anything that really says that this thing has come off with energy, and still suspect that after a little bit we're going to see maybe yet another gap down. Other things of interest. We'll go back to the FANGs. We did Facebook and Amazon, Google. Take a quick look at. This is gapped up on the last earnings on the 29th of July. It really hasn't done anything since then, but gone sideways. This really looks to me like this could be in some distribution. The problem is that Google probably has better visibility for its earnings, at least for Wall Street analysts, than just about anybody else. There's so many other metrics for advertising that come out almost instantly with Google that are more delayed on Facebook, that I think that probably the Goldman Sachs have an edge on us, and that is being able to talk to them, get the data maybe a little sooner, or be able to actually process it and figure out what ad prices are doing. Take a lot to actually go after that. I just, you gapped up, you kind of came back to the gap. I would have to say that if I was going to be long Google, we'd have to come back to $770, $775, something in there. This is yet another stock with one of these double gaps. The first gap happened down on the 22nd of April. And, of course, this gap back up on the 29th of July. And, it seems like so many of these double gaps, big double gaps, are out there. And the stocks over time, whether they're bullish or bearish, are coming back to those double gaps. So keep a very big idea on those. But that wouldn't be enough to interest me back there. I'd need to have some better sign that the wheels were going to fall off the wagon on Google. What else do we have out here? Microsoft hadn't been doing much for a while, but again, this thing's acting more like Google. Very narrow trading ranges, and especially after this gap back up. Another one with a double gap. This double gap would take you to $54. And I don't know if there's anything more to say about that. The risk reward going along here is pretty poor. $54 would be the first point that you'd want to take a look coming back into that. NFLX. I had a couple of stocks that had real nice short runs, squeezed a lot of folks out, pushed through up to previous gaps on light volume. In the case of Netflix, I almost pulled the trigger on this thing and didn't, just because I thought that was better low-hanging fruit out here. It's off about 10% off its highs, but May 26, Netflix was $104, $104, 17 million shares. It did pierce it on October 5th, did so with just 12 million shares. It's come back down now. You got about 6 million shares now. A lot of people want to buy this thing in the $90 range. But again, as I've said, if you were looking for targets on these stocks now, I would be thinking of either buying or shorting to get back to these double gaps. In the case of Netflix, let me zoom in here. Let me zoom in just to this part. The June 29th gap up occurred with 11.6 million shares. And again, you gapped down, blew apart on earnings. It's come back. It gapped back up on the 26th of July on 19.5 million shares. But it looks to me, if you were trying to find some kind of fair market value, at least the consensus of the market, it's going to be probably $89. And I suspect by the time that we get back down under 2,100 on the S&P cash, there's more than an even bet that we sit and hit $89 on it. If you were bullish on this, that's where the buy point would be. If you're bearish and not already short, I think you missed the boat. You would have had to take that light volume piercing of the July and longer May 26th highs. And of course, that 12 million shares of October 5th did go into that big gap down of the 19th of April. Did so on 55.6 million shares, tried to hit it with 12 million shares. That's going to tell you there's a lot of folks out there that are more than willing to get out of this stock in that slightly above $100 price range. Oh, okay, what else do we have going on out here? Well, I didn't play it, but I will bring it up today. I put it in my newsletter so everybody could see. I did tell one of the dinners in there that it was the best Gartley pattern. If you get the Art of Timing the Trade charts, you would have gotten that Gartley this morning in the newsletter. I put it in my newsletter just because if you're looking for the perfect Gartley pattern, which I haven't seen anything better than this one, we will a look at that, and that is GFI. Let me get out here. There's a few things that I like about Gartley patterns that eventually work out. And of course, I wrote this software. I spent a lot of time looking at thousands of Gartley patterns mechanically instead of just trying to go all psychic friends network on them and kind of taking a look where I could be fooled. But we'll talk about this when we come back. This was probably the best looking Gartley that I've seen in a while. We'll talk about why.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking to discover a new financial resource and diversify your financial portfolio, consider the new Market Safe Focused Commodity CD from Everbank. This 5-year U.S. dollar-denominated CD gives you exposure to 6 equally weighted commodities, including gold, silver, copper, nickel, soybeans, and sugar, in one powerful CD. With annual pricing caps of 50% per component, you could earn up to a 50% upside payment at maturity if the commodities increase in value across annual pricing dates. And should the opposite occur, your principal principal is 100% protected. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on this index CD. Don't miss out. Take advantage of this financial resource designed to grow with the times. The October 13th funding deadline will be here before you know it. So hurry over to everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. Once again, that's everbank.com/TFNN. This advertisement is sponsored content. Everbank is a member FDIC.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
And we're back. I wanted to talk about gold fields just for a few minutes, just because, we haven't had a lot of great Gartley patterns. I think probably in equities, maybe it's different in commodities. In equities, I think that there's a real thought that everybody just looks at a Gartley and starts playing with it. Tom did a lot of work with what he calls his Tiger Gartley pattern, which is Reader's Digest version, very light volume in the C to D. And unfortunately, everybody kind of plays and looks at these Gartley patterns and just decides that, it's a Gartley pattern, so there it is. And they really don't look a lot at the volume patterns back in here. But one of the reasons I developed the Power Law Vector Indicator that's in the Art of Timing the Trade is for me to easily see whether or not I need to do some more investigation as to the character of the volume. So when I see something like an 11 on the Power Law Vector Indicator on the way up and then a 6.5 on the C to D out here, I'm going, okay, we haven't seen stuff like this. Everything's been about the same energy on the way up as on the way down. It seemed more like a crapshoot than a good speculation in stocks. But if you were looking for something to run with, this is it. Someone asked me whether or not I liked or favored oil or gold earlier in the morning. I said, I thought that maybe the upside was limited in both of them. But certainly Goldfields Gartley out here is the best looking Gartley in any sector I've seen in 6 months. I mean, you just didn't get a very clear and unambiguous signal for a probably the last half year. It's been a choppy market, and the energy on the way up has just been the same as the way down. You really have to like, though, the C to D leg out here in Goldfields. It did exactly what you wanted it to do. The projection was for a target of 412. It pierced to 399. You also yesterday set right on top of that gap. That gap was from June 3rd. It gapped up on, 9.8 million shares. You got into it with 5.7 million shares. So in a microcosm, this is the perfect chart as far as I'm concerned. It went up on lots of energy. I would like to see maybe the A-point have a little bit more volume for its high, but it's still good. And you still have a decent volume back in the C point with 7.4 million shares. So, even if you were just doing a D to C pop in this stock, $4 to $5.75 is not a bad looking chart. So the risk reward is good. But a lot of these Gartley patterns, there's some small or medium-sized gaps that set up the whole move. You not only have a good Gartley pattern, you have a good test of the previous low. It's well formed. It's not over 2 or 3 days. The X point actually, the start of this thing goes back to May 25th. So what do we have? June, July, August, September. You got 4 months for this thing to develop. And that's why I think a lot of times people miss Gartleys in that they want to trade them at a very low time frame. And the ones that really pay off big tend to be these ones that set up well over time, are very well formed, and give very good signals, especially, like I said, in this one from the C to D leg. You just never really had a ton of energy in this thing, and you had a good, you had 2 different things, not just the Gartley patterns, but you had that nice, good idea of where to set your stop, which is probably anything below a close below yesterday's 399. So, good reward, good patterns, light volume back to the close. I know Tom has been kind of bullish on gold here the last few days. So, it's not bad when you find these beautiful charts like this. And this is a gem among kind of a choppy and listless market for a lot of the moves. Still off 5 points in the S&P cash. Again, as I said, the volume has just gone to nothing around this time, and maybe starting in Monday. And that's really depressed the overall volumes by the end of the day. But we're still at just 2.37 billion shares. And almost all the volume today was very much loaded to the downside early in the morning. It has been very, very light for pretty much since about 11:30. And maybe you can say this was a lower volume test of something previously. I'm just not suspecting that that is it. But we'll see how today's closes out here. Maybe this is just a sideways pattern into expiration a week from tomorrow. But we shall see. What else do we have going on out here? Oh, I've got to get to some other charts. We looked at Microsoft, we looked at Google, we looked at that. Let's look at a few more. Wanted to see how some of these oil stocks reacted up here at the highs. Let's get rid of those Gartleys right now. One of the things I've been watching closely, and one of the reasons why I would have led more this morning toward gold than crude, was the Halliburton chart. June 8th, you had 15 million shares at 46.69. You had 2 tests at about 11 million shares, July 12th and August 19th. You spiked it, but even the spike on October 10th came in with lighter volume, 8.9 million shares. And, of course, today we got about 5 million shares as we push a little higher, although we opened a little lower. My guess is that in the short term, you're probably looking at this gap at around $45 if you were thinking about buying it. The risk reward is horrific at these levels. 45 might be interesting if it comes down with a light volume. But I think you can make a case out here that this is kind of range bound between the $40 and $47 range, dollar range here for a while. JWN, which is Nordstrom's, some of these retail stocks, seeing if there's any life in them. We got into the April 21st high at $54.42, 4.1 million shares. Came into it, but did not break it on August 16th with higher volume. You pulled back a little bit, and you've come back up. You have now pierced that previous high on October 7th, but that was just 3.6 million shares to the 4.1. I probably wouldn't be shorting it unless the volume was a little less. But again, you break the highs, you pull right back into the trading range. There's no real clear signals on this. You have to wait for this thing to come back and recycle. And again, too many of these stocks have double gaps that my guess will get filled. In this case, $48 from the August 12th gap higher. on Nordstrom's. That was on 14.7 million shares. So you're probably going to have some fairly decent and good support at about $48 to about $49. But you have a double gap there. You also have the next double gap at about $44.75. But I think that one there at 48 is the one you would want to be looking at if you were bullish. If you're bearish, I think there's better fish in the sea than Nordstrom's. But we'll take a look. Anyway, we'll be back after this very short timeout.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
My name is Steve Rhodes, author of Mastering Probability and host of the Trader's Edge Show, heard daily here at TFNN.com. On Wednesday, October 19th at 5 p.m., I'll be hosting a special 1-hour event, Trading Range Boundary Lines, where I'll teach subscribers how to identify hidden support and resistance levels, the kind that you definitely need to be aware of for your trading and investing. You'll learn how to plot major horizontal support and resistance, how to identify breakouts and breakdowns, and how to project the next price move. These support and resistance levels work for stocks, ETFs, futures contracts, currencies, and these patterns work on every time frame. By signing up for Mastering Probability right now, you get the first month of my newsletter service for only $49, and that includes October 19th's Trading Range Boundary webinar. Plus, if you sign up now, I'll include access to my 3 1-hour workshops, the ultimate trading signals, the ultimate reversal signals, and the long, short line that every trader needs to know. This is an investment you won't regret. For all the details of the upcoming workshop and reserve your seat today, visit the front page of TFNN.com now.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And since it's Thursday, we have the Tom O'Brien Show for the next 2 hours, and then Andy Heck. We got a little taste of commodities, the little cherry on the top of our Sunday on Tuesdays and Thursdays. Sure, Tom will go through the gold move. Maybe he'll have some comments on that Gartley and GFI. What else do we have going on out here? Oracle. Watching this one bottom and seeing if there's anything out here. Not a lot of volume anymore. I'm not particularly bullish on this stock, but it does have kind of a nice test. You had 51 million shares back on June 2nd at 38.07. We pierced that over the last 3 days, 15 million shares, 8.8 million shares. Today, 10 million shares. Every close above 38.07 is a possible buying signal. Again, the entire markets tend to be set up rather bearishly, and just the opposite of GFI. We had a lot of energy off this July 15th high back down to this low. So if there's more, or at least the way I trade, if there's more energy on the way down, the best I hope for is a consolidation, and then 2, 4, 6 weeks down the line, however it takes long to consolidate at that level, it'll probably bounce a few times, come down there on even lighter volume if it's bullish, and then you can bite there. But too much energy on the way down, and you're much more likely to either break it the next time the market kind of gives up. Now, we're almost positive on the S&P cash here, 2138. But no volume, 2.4 billion shares. So all this has kind of come back on little or no juice. It just looks like some very light volume squeezes. Oh, which I want to get back to on it, because I commented it in the daily newsletter during the day, but it's when. A couple of these stocks really gave some signals that made me think that we had more than just a little bit of a pullback coming. And a lot of these huge, just euphoric moves into highs based on what was going on in China, I felt was incredibly dubious. That was, it was 36 months or whatever it was, 2 years of declining revenues in many of their Macau gambling facilities. And it ticked up 0.2% or 0.5%. And everybody piled on into this thing. They were sure that the end was over, and back at the $56, $58 level, the CEO, I think his name's Wen too, isn't it? Was piling into the stock. Everybody thought that everything was in there that they ever needed. China was going to come back. It was the glory days of 2013, 2012 in China all over again. Money just falling out of helicopters everywhere. But you got a high out here, which kept me from a high volume high on September 15th that kind of kept me out of shorting this. But if you looked at the part of the day, there was some decent volume, and then the thing would move a couple of bucks on no volume intraday. And I thought that this was much more likely to crater back lower. But I wouldn't be shorting, of course, here. But you don't have that much farther to get back into this gap that goes back to the 1st of September, pretty close to it. That day had 6.8 million shares. We got 2 million shares today, so I can't be extremely bearish. But I can say that these China stocks did not act very well off these stocks, where they should have done much better. In the meantime, sell when you can, not when you have to. Here tomorrow, same bat channel, same bat time.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.
You got me staring, and I can't help it.